All right, we're going to go ahead and get started. Thank you, everyone, for jumping on here and making time to join our webinar today. I appreciate it. My name is Paul Shurin. I'm an economist with Impact Data Source. Today, we're going to be talking about this idea of what is an economic development impact analysis. And so, there's, economic impact modeling has a lot of different uses. Our company, Impact Data Source, is focused mostly in the context of economic development deals. And so I want to talk about how we approach things and how we evaluate projects and help clients evaluate projects. And we'll also kind of do it here in the context of our software impact dashboard. We're gonna have a kind of a general discussion, maybe for the first half, and then in the second half, we will maybe turn it over to some questions, or we can just do some advanced topics. I know we have a mix of, just in terms of the audience, I can tell we have some folks who may not be as familiar with us that are just interested in the topic here of economic development impact analysis. And then we also do have some of our clients who are actually using the software. So if we want to, like I say, go into some of those advanced topics, that might be the best place to do it. If you have questions as we go along, feel free to type it into the chat, or I think there's like a Q&A feature that I should be able to see at some point. And I'm pretty sure we're recording this, so we'll have this available for us later. But I'm gonna jump on in here. Um, so as again, Paul Shurin with Impact Data Source. The concept of an economic development impact analysis for us, as we think about it, it really combines three distinct elements that are kind of connected and put together into that analysis. And so the first one, as we think of it anyway, is the economic impact. And that's going to be kind of the originating activity that's driving some spending in an economy. And so that spending, whether it's a new business coming in, maybe employing some workers, we want to be able to quantify that. So this is a kind of a screenshot of an example, but we'll kind of just hit it off the high levels here. We have the economic impacts there in the upper right, kind of in the blue. We're taking the concept of the company may hire, let's say, 100 direct jobs, and that may support some spin-off jobs in the community. So those indirect and induced workers. And that, of course, those workers are going to get paid a salary. With that company coming in, there may be some capital investment associated with that. So they're going to invest in a building and FF&E. And then as all of this kind of shakes out over time, there could be some residential development or residential impact in terms of workers possibly moving to the area and maybe constructing new homes. And so that's, as we think about it, that's the economic impact, and that's kind of starting off this entire chain as we're trying to wrap this into an economic development impact context. The next step, as we think about it, is that we translate those economic impacts into fiscal impacts. And so just kind of as a screenshot anyway, we're showing a graph over, this is a period of 10 years of the additional revenues, so like new tax revenues and so forth for the city, so those benefits. And then we're also estimating some costs. So trying to account for the potential for some uh, new costs for the city to provide services to the business or to new workers. Um, and then finally boiling it down to the net benefit. So on an annual basis, and then over this time period, being able to project out what is the net benefit after we account for all the additional revenues and all the additional costs. And each community is going to be a little bit different. As we're doing this analysis in this screenshot anyway, we're looking at a city. With our software and the way that we think about it, we need to break that out for the county and the school district and any other taxing district we might consider. But that 1 million, as we're looking at it here, about $1.1 million of net benefits represents the value of this project to the community, and so, or to the city in this case. So $1.1 million net benefit, that's the value of this project. And that is going to be useful for us as we start to consider potential incentives. And so as we're putting this on the page here, we see the incentive analysis in the gray box, and we can see that we're considering a $500,000 incentive compared to the net benefits this project generates over time, and we can calculate in that context a payback period and a rate of return. And so that's the way that we try to tie all of these things together, again, because economic development will typically have, it's again, very often project-based, number one, and then there's usually some sort of incentive or funding mechanism that may be coming into play there. So let's jump into a few more slides here, and then we'll actually jump into the actual app. Um, so as we go forward, these are some of the screenshots of the app as well, just kind of zooming in on some of the detail around the different elements of the analysis that get put together. Here's some of the incentive screenshots as well. So not just, as we described it, like a $500,000 incentive, but maybe property tax modeling of a rebate or an abatement, sales tax rebates, and other things. Before we go too much further, I'm going to just touch on kind of the little bit of the confusing thing. So Impact Data Source, that's the name of the company. That's the company that was established by my partner, Jerry Walker, in 1993. Some of you may be familiar with Jerry in the past. He passed away just about a year ago, a little over 1 year ago. But he had operated Impact Data Source for about 30 years. We're now 31 years in. I joined Jerry in 2009, and so worked with him for about 15 years. Basically, Impact Data Source is specialized in consulting services for economic and fiscal impact analysis, primarily working with economic development organizations or governments to help them understand those economic development impacts. And again, most of our clients are considering some sort of economic development agreement or incentive. On the software side, so Impact Dashboard is the product. So it's a web-based app. We have over 150 EDOs or cities, counties, and so forth using the software. It includes kind of a wide spectrum of different entities. Within Texas by itself, where we're located, we have about 75 either cities, counties, EDCs in Texas. We also work with a couple states, state of Kansas, the state of Tennessee, their Commerce Department and Economic and Community Development departments. And then some other kind of like larger organizations like the Orlando Partnership that kind of covers multi-counties there in the Central Florida. And the Indiana Municipal Power Agency is another example of an organization that we support through their individual member communities. So the agenda for today, we're going to talk about this idea of an economic development impact analysis. And we're going to have a closer look at those economic impacts, fiscal impacts, and the incentive analysis. We're going to show how this works in the context of Impact Dashboard. And we're going to talk about kind of that economic development workflow. As we're talking about this, running those reports or getting that information is helpful, but we want to understand how that can come together in terms of collecting the information from the prospect, let's say, understanding information about the company's plans, and then implementing or modeling those incentives in a scenario. As I mentioned, we'll probably have some time toward the end for some advanced topics or a Q&A. I've just thrown a list of a couple things on the list here, but certainly based on our attendees and direction there, we can kind of tackle any question we want. Let me flip over to the actual app now. I'll close out of PowerPoint. And now we're looking at the actual app. And I have my test account pulled up here with a hypothetical project. This is looking similar to what we just saw in the initial screenshot. So we're here on our reports tab of the software. We're on our summary reports tab, and you can see we've got an individual page for each one of these jurisdictions. So in this case, we've got a city, a county, a school district, and then a hospital and college district, kind of just property tax and districts. As we were looking at before, the upper right-hand corner is capturing those economic impacts that are driving the whole chain of events here. So as the company comes in and they're hiring employees and they're paying salaries, these are some of the economic impacts. In our model, we're showing, as we see this, 100 direct jobs, and then in this instance, 95 spin-off jobs. The spin-off jobs It actually includes indirect and induced, the indirect representing those kind of business or the supply chain impacts that happen as this company makes additional purchases in the area. And then the induced side of those things is reflecting kind of the consumer expenditures associated with those workers that might re-spend money in the community. So we're using the term spin-off here to reflect both indirect and induced. Kind of just saves us some pixels in terms of trying to say indirect and induced versus spin-off there. But in total, between the 100 direct and the 95 spinoff, we're generating at the local level the 195 total jobs. With regard to salaries, we're picking up about $75,000 in direct salaries on individual average salary. And then spinoff workers make a little bit less on average. And then across all of them, it's about 68,000. The capital investment, again, is noted here in terms of what are they investing in terms of the value of the building and FF&E, furniture, fixtures, and equipment. And then again, the residential development, acknowledging that some of these positions, whether 195 jobs are being created, some of those positions will be filled by people that might relocate to the area. So as we just look at the math here, about 14 relocations, most of the jobs in this case are intended or expected to be filled by people who either already live in the city or may commute into the city. But of particular interest to us in this, context of an economic development impact analysis, we want to understand this population impact. So these worker household relocations are important to us. And then we can make some additional assumptions about whether or not we expect those new worker households to move into an existing home or an apartment, or maybe have new property constructed. And so this 2.1 homes here is reflecting the idea that there might be some new residential property construction, which is going to also drive some potential tax revenues for us. Okay, so again, our economic impacts are kind of the start of everything. Our fiscal impact, in this case, now we're stretching out over to a 15-year time period. So typically, these projects may have some ramp up, or there may be some phasing in of different activity. So it's important to be able to look at it over a period of time. Additionally, a lot of economic development incentives might be over maybe a 10-year time period, a 15-year period. And so the software as we have it here, I mean, is able to kind of just reflect whatever time period you'd like. And so in this case, we've selected 15 years, but it's really just kind of one of those things that is specific to maybe how you want to run things, or this maybe the incentive or some of the other details of the project. But again, we're looking at this graph and we can kind of get a sense of how things go over time. It kind of jumps up here around year 6. These dark blue bars are representing our benefits, or those additional revenues that we're talking about. If we were to add all of those up, stack them on top of each other, that would be this 3.6, 3.7 million in benefits. The lighter blue bars below the line, these negative amounts, are costs. So these represent kind of costs to the city, like operating costs and so forth. We'll talk more about that. So that's 1.1 or 1.2 million in costs over the 15-year period. And then these orange dots are just reflecting that net benefit each year. So as we compare the benefits to the cost each year, we see these orange dots show us that net benefit. If we add up all those orange dots there, that's about 2.5 million in net benefits. And again, over the 15-year period. When I scroll down on this page, we're going to get a better sense of the source of those different revenues. Instead of just thinking in the broad context of additional revenues, we can see the source of that revenue. So for example, this is a model that we've set up for a community in Texas where cities typically have a portion of local option sales tax. They'll also get some property taxes on the property, and then some various other revenues that we can take a look at. So the primary one that we see at the top is sales tax revenue, and we're picking up about $800,000 there. The model is going to incorporate sales taxes from a range of different activities. So for example, if there's some construction associated with the project, we may pick up some sales tax on construction materials that might be purchased in our city. If we think about the workers respending their money, some of that money might be spent on taxable goods and services in the city. And so we're kind of capturing all those things along the way. Now, if the company itself will have taxable sales, that might be something we pick up as well. So depending on the project and the specifics, that may be something that applies, or maybe it doesn't. So a typical manufacturing project probably doesn't have taxable sales that's going to generate our revenue there. As we look at some of these other revenues, we can see real property, FF&E, inventory, and so on. We're picking up like hotel occupancy taxes from visitors. building permits and fees. We're even considering things like city-owned utilities. So in Texas, it's common for cities to provide water, wastewater, solid waste. And so as this business operates, they may be using some of those city-owned utilities. And as these workers relocate to the area, they may be driving some additional utility revenue here. We're going to balance that city-owned utility revenue with a cost to provide those utilities. So when you think about it, the city's going to have some cost to provide that water service or that sewer service. And very often that's going to be a little bit of a wash. And so we can see comparing those numbers, it's almost essentially a wash. Other things that we're picking up here are just kind of the primary revenues that we expect to increase when we have more business activity or we have more households in the community. The costs side, we talked about utility services costs, but now cost of government services, this is intended to represent, in Texas anyway, kind of the general fund expenditures or the marginal cost to provide general fund expenditures for the city services. So primarily that's going to reflect things like public safety, so police, fire, EMS, and those sorts of things, again, related to having more business activity or more households in the community. And so those two things, as we saw, came together to generate net benefits of about 2.5 million. In this model, we're looking at a $400,000 incentive, so kind of like maybe an infrastructure grant or something like that. And so we compare $400,000 to this net benefit of 2.5 million over time. And we do that down here. We see the orange line reflecting the 2.5 million in net benefits over 15 years. And then that incentive paid out up front. We can calculate a payback period and rate of return. So in this instance, we're coming up with about a 2.2-year payback period. That's the period of time where it's going to take the city to collect enough in net benefits to pay back that $400,000 incentive. The rate of return, this is a kind of a simplified average annual rate of return. So we're looking at receiving 2.5 million over the next 15 years. So on average, we get that. And then on a $400,000 investment, that's about a 42% average annual rate of return. And so that's what we're looking at here. And again, this is for the city. And so if you were the city trying to make a decision on this incentive around 400,000, you can use this to kind of get a gauge of whether or not you think that's a good use of funds, maybe along with some other context. If we click here for the county, we can see we can run the same type of analysis for the county, focusing on the economic impacts happening within the county, separate from what might happen specifically within the city. And then we can also capture the net benefits, or excuse me, the fiscal impacts for the county based on the county's revenues, such as the property taxes in this case, and the government services that it provides. This model is incorporating a property tax abatement from the county as well, so we see some other calculations here. But again, we'll have this information available for each one of the jurisdictions, and ultimately, we can print these off and have good one-page summaries for each one. One of the reports that I skipped over here, which actually provides a lot of context, so if you were presenting this to city council or board or whoever your stakeholders are, just providing this report might, it cuts to the key features of our economic development impact analysis. But we find that this fact sheet report can be helpful in kind of just getting everyone on the same page and summarizing the project as it exists. So I skipped over this, but we might realistically do this in a different order, where we have this fact sheet where we're showing this project represents a recruitment project in our advanced manufacturing sector. They're considering a particular site. We've done some background on the company behind the project, and we can see their NAICS code, the amount of square footage they're looking for. They're going to purchase some land and construct a new building. We've got their timeline, as well as the key features of their investment in the building and their employment, phasing in 100 workers over 2 years at $75,000 a year. You can also add additional descriptions and context here as you try to communicate everything you are considering for this project. And so the model and the software allow you to kind of collect this information and get it organized, and then share it as we see here in this fact sheet, and then start to analyze it by presenting it in these summaries that then can be shared. We also have a detailed report option for us as well. This one is going to look a little bit more like a traditional report with a narrative and different descriptions. It'll have some more detailed tables and so forth. It'll show you, for example, like the value of the property over the time period and so forth. The model is going to have, the community's local property tax rates built into it, the local sales tax rates, all the different elements that are going to allow us to be able to model the local tax structure and those fiscal impacts. That's something that we do, Impact Data Source will do and kind of prepare for you. So if we were to go into our settings, for example, this little gear icon will allow us to kind of review the various assumptions and settings that we have for this analysis. So we can kind of see what tax rate we're using and what sales tax rate we're using. And you can really, review everything. If you needed to change something, you certainly could. But the big idea is that that's information that we would build in there for you so that you have it and don't have to gather that yourself. If we take another step kind of backward in this process of putting this report together, we can go to the scenario info tab and kind of review the information let me just refresh this real quick. We can review the information that was leading into those reports and the results that we saw. So on this page, we're going to see the ability to specify all of the project inputs. And this is not a great demonstration when this thing's having trouble reloading, but give me just a second here. We'll try it again. And really, we have two different ways that we're going to get information into the model. We can collect it from the prospect themselves. Man, we are still taking a long time. We're going to try this another way. There we go. And so we can collect the information from the prospect directly using an integrated data form feature. And in that case, it's really just send a link to someone, they fill out an online data wizard, and then send that information to you, and you click a button and it's in here. The other way is if you have your own application, you've received a PDF or whatever, you could come in and start typing that information in. So we can talk about that process and how the data form works in just a second. But this is where we're seeing that 100 jobs come in, and it's phased in over 2 years. If we wanted to add another 50 jobs, we can do that here. We can see that get reflected right away, all in real time. If we click through here, we can see some of these assumptions that would be built in or that we can capture here. Here's the salaries being paid to the workers. Here's that capital investment. So we have the investment being broken out, whether it's an investment in land or buildings or FF&E. That's important to us, and also, of course, the timing of that. This report again is out over a 15-year period, so we have the full 15-year time horizon to kind of access and plug in values. The other parameters that we can see down the side here are going to be related to building permits and fees. Texas is one of those states that still taxes inventory, so we're going to have the possibility of taxable inventories, taxable purchases or taxable sales, those sorts of things, and then being able to capture perhaps hotel nights and visitors and that type of information. You can also add descriptions here that are going to show up in the report for you as well. On this right-hand side, as we're looking at this, we're seeing kind of a sneak peek of our results so far. Again, as we make changes to things will update in real time. We can see this graph, or we can click around and get a table view of things, which is nice sometimes. We could click over and see what's happening for the county or the school district or any one of those jurisdictions. If we click on the public support tab, we're going to be able to get an overview of our incentives that we've modeled so far. So in this example, I've got a $400,000 infrastructure grant and a $300,000 property tax incentive from the county. So if I were communicating this to the company, I might explain that the total incentive package is worth $700,000, for example. We can go in here and model additional incentives or modify what we've already plugged in. Each one of these jurisdictions will have the ability to kind of apply a particular incentive. So for example, property tax incentive could be modeled here from the city's perspective. If we click, we can call it an abatement, we can call it an exemption, a rebate. It's all going to kind of change the terminology. It's going to, the math is going to be the same, but the terminology can change. So if we want this to be an abatement, we could do that. And maybe I've kind of deselected this, but I plugged the schedule in. So if we wanted to enable that, just check the box, so to speak. We've got 100% abatement for 10 years on the building property. So that'll calculate for us against the city's property taxes. That's almost a $500,000 incentive. I'll take that off. We can go down here and we can see there's other types of tax incentives we could model around initial purchases of materials or FF&E, around the company's ongoing taxable sales. We might rebate some of that. You can, if if it's an option for you, you could rebate hotel taxes as well. But then there's that, as we call it, a non-tax incentive in here that we can model, maybe something that's not tied to a specific tax revenue, but is some other value or money out of pocket that you might consider. So in this case, we were thinking of this as like a $400,000 infrastructure grant. Um, Perhaps you'd be in a situation where you're giving them a piece of land and it's valued at $400,000, and you want to account for that as the value of your incentive. This is a really flexible piece of the model where we can actually come at the incentive from a couple different angles. So for example, you might say the company has asked for $400,000. Let's plug that in and see, how that looks. And so we see it's a 2.2-year payback period and a 42% average annual rate of return. You might say, well, I know our city council, they're not going to go for 2.2 years. It has to be 2 years, no longer, right? And so in that case, you'd be able to come in here and say, I want to specify a payback period instead. And that's going to allow us to put in that payback period at exactly 2 years. And the model will help us figure out, well, that's equivalent to a $375,000 incentive in that case. And so it's going to shorten that time period to 2 years and then reduce that incentive that we're talking about. You can, as we see this here, we can model based on maybe even per job. If we wanted to do something like $5,000 per job, we had 100 jobs being created, being phased in over 2 years. And we can see a total $500,000 incentive hits that payback point right around 3 years. We can see it's 2.9 years as it gets calculated. And again, we're doing this, the idea, the concept is that the city's offering an incentive, so we want to compare that incentive the city might offer to the net benefits that that entity receives, so that city receives. So if the county were considering an incentive, we could click over to the county and maybe model incentives that way as well. As we make changes there on the public support tab, you'll see it reflected on all the reports. And so everything that you might produce here is just coming together. One of the big things that happens with economic development projects and this type of modeling is you'll very often go through multiple iterations, right? So we were looking at 400,000, then we went to 500,000. And so you might want to just kind of save these different scenarios so that you can come back and reference them later. So let's go back. Let's keep this one at our 400,000. Whoops, that's a county. Let's go back here to our incentive amount. We'll do 400,000 for this one. And I'm going to delete that 0. So now we're back to our 2.2. This is our $400,000 grant scenario. I'm going to close out of this, and we're going to see now I'm looking at kind of all the data. You can think of this as like the folder for the project. This is our Vandelay Industries Control Center page. And this is listing out the various scenarios that I've run for this model or for this project. And so, for example, if I wanted to do another iteration of this, I can just hover over, I'm hovering over the scenario, click our copy icon, and it's going to allow me to create a copy of that scenario. And in this case, this is highlighting kind of one of the features here. When each year, when your property tax rates change or we go and update other information in the background, when you make copies, you may be making a copy of, say, quote unquote, an old scenario. And so in this case, as we're looking at this little modal that popped up, it's asking you, it's telling you, hey, the scenario that you're copying was made with tax rates from the previous year, and it's just confirming, do you want to use the newest tax rates, or would you like to just copy, the scenario exactly as it was? And so we'll see, we'll just try to make a pure copy of it. But that's something that when we update information for you kind of on that annual basis, we're not going to change previous projects. You're just going to have it available to you on new projects, or in the case of copying an old scenario, you'll be able to kind of flip to those new tax rates. And so if we come up here, we can change copy a $400,000 scenario. We want to make this the $500,000 scenario, right? And so that's just allowing us to kind of give this a distinguishable name, and it's a separate analysis. Sometimes our clients will be going through iterations where, where you're, getting different details about, well, they're just going to do phase 1, or maybe they're going to do phase 1 and phase 2, or maybe they're going back and forth on how many jobs might be created. So you have a 100 job scenario versus a 75 job scenario, whatever it is. And so that's kind of the way folks might use this, this iteration, so to speak, around creating various scenarios. The other information we can see down here that I haven't touched on yet was this idea of the data forms. And so I had mentioned that you can create a data form template and then share that with prospects to collect the information. And so I think the easiest way to think about that is to see the template or see the data form in action first. So I'm just going to click through a preview of what that looks like. And so when you share this link with your prospect or the new business, you can do that one-to-one either by sending them an email or maybe taking a link and posting it on your website. And so anytime somebody clicks on that link, they can start filling out information and send you details about their project. But in this case, as we're looking at it, this is my test account. So this is kind of my generic ED Corporation logo. And if you have questions about this, you can contact me. And so this would have your branding and your contact information if this was your account. If they click Get Started, they're going to fill out their name and email address and kind of tell us what their role is. And then they're going to help us as we think of this. We're going to do some branching and we're going to say, hey, is this a new business or an existing business? Because if it's an existing business, and it's very common in economic development for an existing business, maybe planning an expansion, we want to ask them different questions than if it's just a new business. So we'll kind of make things a little bit more complicated for ourselves, and we'll go through this existing one. If I click next, we're going to see that we have a whole section where we want to capture information about the company's current operations. And so we're kind of noting that up here, that we want to know about the company's current operations, separate and apart from the possible expansion plans. So now we just want you to focus when you tell us these inputs, what's your current number of existing employees? What are the average salaries paid to those existing employees? What's the market value of the property that you currently support? Those sorts of things. And then as they work their way through it, they'll be able to indicate that, yeah, we plan to expand. We want to hire more workers or make more capital investments. And so if they do that, we'll go through a series of additional questions, again, asking them to separate just the incremental activity now. You've told us about your existing operations. Now we want the new activity. And so again, what are you planning to do? What's your timeline? What site are you considering? All the different things that you might, as an economic developer, be interested in collecting and knowing about the project. You can ask for the number of jobs to be added, the salaries paid to those workers. You could also ask a job and salary detail a little bit differently here, where you ask kind of by occupation or position, number of employees and average salary. And then this can kind of allow you to get a better insight into the jobs that they're creating. You can ask them if they're providing benefits. All these different questions you can see here are available to you. You do have the ability, if you're looking at this and you're like, this is pretty overwhelming, I don't want to ask about benefits, I don't want to ask about their timeline, I just want, tell me your jobs and salaries or something. You can trim down your template and customize that so it's, reflective of just the questions you think are important. But you do have this ability to kind of ask some supporting detail questions. So asking kind of an open-ended question here, you can change the prompt and ask them, what incentive are you applying for, or how can we help you, that sort of thing. You can ask them to upload specific documents, maybe tell them upload your site plan and your hiring schedule, whatever it might be. And then again, we're going to ask them, tell me about the company behind the project. We've focused on the project. We want to know what you're doing locally here, but now tell us about the company, where you're located, where you were established, when you were formed, all of that. And then finally, the great thing about this is, if you've used economic development data sheets or applications and those sorts of things, it's like typically a PDF, and people write on it and scan it in, and you get it back, and it doesn't make any sense at all. They're contradicting themselves from page 1 to page 2, and it just ends up, setting up the next phone call essentially to try to sort out all the things that maybe they misinterpreted or that wasn't clear on the page. But this summary report, or excuse me, this review and submit page where we list a bullet point summary of the key details that they've provided really helps them kind of review and understand, oh, I didn't quite understand that question. So now as you're repeating it back to me, I need to go and edit that particular question or that response. And so as they do that, they can edit straight from here. They don't have to go all the way back through the thing, but this really helps them confirm that they understood the question and gave a relevant response. Once they're good to go on this, they can hit this submit and send button, and then that'll notify you that, hey, someone filled out the data form, and you can review that in your account. When that happens, you're going to get that email, and then you'll be able to log in, and you'll land in this inbox here where you'll see a list of submitted data forms. A lot of these looks like I've submitted to myself, but if we click on this, we can see kind of what those responses look like when you receive a data form from a prospect. And this one always hangs up, and I do it every time, but we're going to try to catch it quick here. Um, the uh, the data form will come back to you in kind of essentially read-only format, so to speak. So you're not going to be able to make changes to this data form, but you are going to get that same bullet point summary where we see the specific inputs highlighted and bolded. As I scroll down, we can see every single field that that prospect filled out. And, again, this is locked in. We can't change it at this point. But what you typically would do is just go here to click assign to a project. And then you can either, if you've already created, if this was one maybe associated with my Vandelay Industries project, I could assign it to that existing project that's there at Vandelay Industries. So I could just select Vandelay Industries and then assign and create scenario. Or if this is a brand new project, I can click create project, and we got project X here, and then we could create that scenario and be on our way. When we do that, again, this is going to take the information that the prospect provided and dump it into that scenario and allow you to start running those scenarios, and the impact results will appear right away. The one thing that you would need to do at that stage might be to go in and well, number one, review the information that they gave you, make sure everything makes sense, but also the public support element, so the incentives. We don't ask the prospect for that information. So that's something that you would come in and say, okay, well, for this one, we were going to do, let's say a property tax abatement. And so you can go and plug that in. As we go back to my Vandelay Industries project, and we're looking again at here are the scenarios, and then here are the data forms. You can see that I actually have two data forms associated with this project. The first one was sent to me, and then we wanted to do a revision. So we sent it back, so to speak. We can allow revisions. We can send it back to them, and then they can modify whatever needs to be modified. And then we get this tag, as we see it here, that this is the one that has been revised. So we don't lose what they submitted initially, but then we can identify that this is the one that was later updated. So I've been talking a long time here, and I will kind of pause or slow down for a section and see if anyone has questions that I can answer. I know we've got a lot of kind of folks at different levels for us. So if I'm looking now, if there are any questions, I think we've got the webinar chat. We also have the Q&A thing. But we have folks who may be seeing a lot of this for the very first time or not necessarily familiar with Impact Data Source or Impact Dashboard. And then we have folks who are actually using the model already. So if we have whatever kind of question you have, if you have a question where you want me to talk about a specific thing in your community, we can certainly do that, or we can keep it more general. Again, feel free to type stuff in. If we kind of just keep showing off the software a little bit, this is our Vandelay Industries. These are the various scenarios we've run. If we take one more step out, we're going to be able to look at all of our projects. So here we kind of organize our projects based on their status, so to speak. So we're on our tab for active projects. So Vandelay Industries, we were working on that one. We had created 3 scenarios. We can see we've got different tags that we've applied to those to keep things organized. And the other kind of possible status we can see here is for projects that we've won or that we've lost or that we just need to throw in the archive because it's just maybe gone dormant or just isn't something we got a definitive answer on. The other option is just to kind of get all of them on one page, and then you can kind of search your project. So I probably already have a project X or 2. I use Project X quite a bit, but you can see that as you search through there, you might want to make unique names for your projects. But you can also kind of try to find all the ones that are tagged with recruitment and maybe in a particular year or whatever it is, and you can see you can zero in on those projects if that's what you're trying to find. I've got a question in the thing here. It looks like, is there any available access to a trial for the software? I'd like to show staff. The short answer to that is no, not necessarily. The software is going to be, there's a lot going into setting up your actual account so that you'll have your tax rates and your jurisdictions and everything. So part of the the process of bringing on a new client is kind of that initial upfront research where we organize and customize your account. We could put together potentially a generic account for you that was not reflective. Maybe it's reflective of how the taxes go in your particular state. This was from an anonymous attendee, so I'm not quite sure what state we're in, but we can probably set something up if we want to do that for like it wouldn't necessarily be a trial where you're going to get real results, but there'll be it could be a trial where you get a sense of how this works, but we just need to be with the understanding that it's not going to have your real actual data in there. We can also do one-on-one demos too. That's typically the way that most things go. If we're working, if someone's interested in the software, we can do a one-on-one demo and look at a more relevant example. If you're not, for example, if you're not in Texas and you want to see something in your state, whether it's we have clients across the country, so we're pretty familiar with how these local impact studies go and some of the differentiation there in those other states. So I hope that answers the question. Feel free to reach out if we want to go down that path a little bit. I'm going to go back to my slides here real quick and just look at that on my other screen. I appreciate everyone joining us. We're at 42 minutes or so, so I've been talking a lot. I had mentioned the idea of a couple advanced topics. Let's go back. I talked about data form revision, so we've kind of touched on that. We talked about copying a scenario. I want to talk about maybe changing some of these parameters. So I mentioned this ability that you can go into your settings and adjust, whatever the property tax rate or different assumptions about how the capital investment comes onto the tax rolls. One of the big ones, which we still seem to get from some of our clients, is the idea of being able to adjust the length of the analysis. So for example, let's pretend for a moment that we wanted to extend this analysis to cover a 20-year period instead of a 15-year period. And so that's going to be controlled by going into our settings area. And that's going to be something on our general assumptions tab that we see here already. And if I scroll down on this, I can see we have scenario length in years, and that currently set to 20, excuse me, currently set to 15. We can see we're noting that originally I changed it because it was by default, it was 10, but now I can put it at 20 if I want to. And as I do that, I can go back to my reports, go back to any page here, and now we see our results run out over a 20-year period. So that idea of the different things that you might change in your settings, they can be done at any time. It's not something that you have to do the first thing you do or the last, you can, the changing this 20-year thing can be done at any point as you make copies or whatever you're doing. The other kind of advanced topic, as I call it, is the idea of adding a custom revenue. So sometimes a deal comes along and maybe the city is, as a part of this project, they own a piece of land or maybe they own the building. And instead of the company paying property taxes, they're actually going to make lease payments to you. Or maybe they're going to pay property taxes and you're going to get lease payments because we'll leave the property taxes in here for the time being. But we wanted to account for lease payments paid to the city. Like, let's pretend that that's what we need to do. And so I'm going to go into, again, our settings area, and I'm going to click on our city tab. And I can scroll down on this city tab, and I have an area where you'll see this button for creating direct revenue. This is going to allow us, it's basically going to create an input for ourselves, and it's associated with the city, that it's going to be a direct revenue. And we're going to be able to name it whatever we need to. And so I'm going to click that button, and we're going to call it lease payments. And these are going to be lease payments paid to the city, right? This is revenue coming in. Man, can't spell on a webinar. There we go. So lease payments. And we have this option whether or not it's a percent increase or no percent increase. On something like a lease payment, it's probably going to be the same amount or maybe some amount that increases a little bit every year. So I'm going to actually say percent increase. And now what I've done here is created an additional input for myself on the scenario info tab. As I click here, we go back to our lease payments for the city are showing up now. And we have a section here where we can put in the revenue amount that's going to represent these lease payments to the city. And we can just say, let's pretend that they're going to pay $15,000 a year every year for the entire 20-year period. And right now this is set to 2%, but let's adjust that so that it's just flat 15. And of course, this thing is being goofy. Let me refresh real quick. This is a tortured scenario and a tortured client. So I'm going to blame that on the reason for all these reloads, but we can go in here now, hit 0, and we've got 15%, or excuse me, 15 uh, $1,000 every year for 20 years at 0% increase. So now we're capturing that additional revenue. If we go over to our report now, that gets integrated into the results here. Now we can see we're getting that $300,000 in lease payments that would be paid. The same thing might be true. This is just an example of lease payments, but imagine if you wanted to model a payment in lieu of taxes, you could come in and do that. You could model a one-time land sale. So if you're going to actually sell a piece of land and you as the city are going to receive that money, we could put that in there. And again, if the county were going to be involved in this in some way where they're going to get kind of a custom revenue, so to speak, we could add a custom revenue for the county. So all of this is dynamic for each one of those jurisdictions. One of the things that I have not touched on yet, we talked about it in regard to receiving the information on the data form, was that idea of an expansion project. But we didn't look at what that looks like in a scenario. So I'm going to do that right now. I'm going to close out of our Vandelay Industry scenario, and I'm going to switch over to a project that I've got set up for an expansion. And so I think this is going to be the one we want. If I click on scenario 2, this project, as I click on this basics, we've indicated that it's an existing business that's planning an expansion. So obviously this represents a BR&E project, right? And so on these, again, as we talked about, is there's this idea that we need to keep information straight. So the biggest thing, the easiest one to think about is the jobs. So there's an element of there are some retained jobs and then there are new jobs. And we don't want to treat them necessarily the same. And there may be times when you just want to focus on the new jobs and exclude the retained jobs. And so that's what we're, have the ability to do here. So when it's an expansion project, you get this additional section on your scenario info inputs. And as we talked about in the data form, it's kind of a whole different section as well. We're capturing the market value of the company's existing property, and we're reflecting the number of existing employees at the company's local facility. So this is that 65 jobs. So those are the retained jobs. If we just, there's a lot going on here, but if we just think of this as in the context of jobs, we see 65 existing jobs, and then on the new jobs to be added, we see 250 new jobs. So now, as we think about this, we could model this, we could run our results, kind of get our reports, and we could just focus on the new jobs. So we might just say, hey, what's the impact of the expansion? And so as we look at over here on the right-hand side in these sneak peek of our results, we see 250 direct jobs. And that's what this is reflecting. These results that we see here are just reflecting the incremental impact or the expansion impact. We can see up here, this little toggle is what is going to allow us to control that for ourselves. So there are times when you want to just take a narrow view and say, we want to understand what's the incremental impact of this project. We just want the expansion only. There are other times when you say, hey, I need to understand the total value of this company. I need to understand the current value of the 65 jobs as well as the incremental 250 jobs. So in that case, you might click this toggle and get your results to focus on the total number of jobs, of direct jobs. So the 65 existing jobs and the additional 250 new jobs to be added. So that's what this is going to allow you to do. So our software is going to change some of these reports for us so that if we say total combined, our net benefits are going to reflect the existing activity continuing out over, in this case, 10 additional years, as well as the expansion impact coming on over the next 10 years. And so we get this net benefit of $3 million. The impacts are shown here. When we say 315, we mean 250 new jobs and 65 retained jobs. That's how we get 315. And we can look at an incentive that might be intended to be, let's say, a truly retention type of incentive where it's either all or nothing. Either the company stays and they expand, or if they don't, maybe they're going to leave. And so you're really at that point of all or nothing. So it makes sense to look at the total combined value against this incentive. So if we offer this $1 million incentive for the total combined activity, we can see that $3 million net benefit over the next 10 years. And we can see, okay, if we do that, that's going to give us a 3-year payback period. And that's pretty good. Maybe we're comfortable with that. Now, in another circumstance, you might say, hey, wait a minute. the current jobs are not at risk. They're either going to do this expansion here, or they're going to keep the 65. There's no way we're losing those. So they're asking for $1 million, but we need to be more precise and only compare that $1 million incentive to the expansion impact. So the new impact, the 250 jobs. So in that case, we flip this switch again and our results update. Now we're not talking about $3 million of net benefits anymore. We're back down to 1.9. We can see this gets reflected up here. We're talking about 250 direct jobs. We can see this even clarifies for us that the summary does not include the impact from the company's current activity. So we want to acknowledge it, right? So if you're presenting this to your board or city council, you don't want to forget that, hey, keep in mind, this is a good company. They have 65 jobs here. But we want to focus our expansion on just focus our analysis on just the expansion. So again, if we do that and we're just focused on the expansion, we only get 1.9 million from the expansion activity instead of 3 million when we included the retained activity. And so that $1 million incentive, it's going to take us a little bit longer to get paid back. Previously, I believe it was a 3-year payback period. Now it's 5.1. And so that makes sense. It's going to take us a little bit longer to get paid back, but maybe we're still comfortable with that. And just toggle this here as we stay on this spot. We can see there's our 3-year payback period when we include the total combined value of this company. And then if we flip it back, the expansion only, we see it's 5.1. The detailed report will kind of adjust as well. We'll get some additional breakout tables here to show kind of in columns. Here's the impact from the current operations. Here's the impact from the expansion. And then here it is in total. Same thing with the net benefits. The current operations over the next 10 years are projected to generate about $1 million of net benefits for the city. The expansion will be about 2 million. So when we put it all together, the current and expanded operations would be about 3 million over the next 10 years. So that's kind of how you can kind of drill down on these incentives with expansion projects. And again, this is such a common thing for economic developers to have to deal with. We wanted to make it as easy as possible as we see it here. I am looking here, going back. I don't see any other comments or questions as I'm trying to look at all my screens here. But I appreciate everyone joining us today. I'll kind of wrap up, but if you have a question, you can throw it in there quickly. We should have a recording of this that I can send out in an email for tomorrow. If you have any questions about the software or what we do, feel free to reach out. We have this software which a lot of our clients will use to kind of take control of things, so to speak, and run these impact reports themselves. This is the typical thing that our economic development clients are using the software in-house throughout the year. Essentially, we set up that model for them, have all the data in the background up to date, and then we're available throughout the year, throughout that annual subscription, to answer questions. So a lot of times if you run a model and you're trying to understand why is this number high or why is this number low, or you're just nervous about, I've got to go present this to city council and I'm worried they're going to ask us X, Y, and Z, you can reach out and we'll look at it with you together and kind of explain what's going on. And so we can help out kind of on throughout the year as you use the software. We also do training for you. So once we set up the model, typically we schedule a training where everyone in your organization can get up to speed on your actual model instead of looking again at my demo account. We did have one question come in. They're asking about TERS projects. So a TERS in Texas is like a tax increment financing. So tax increment reinvestment zone projects in Texas. Yeah, we can do that. I'll actually implement that in this project. So if we wanted to, the idea with a TIF, just broad concept here, is that you're going to have the incremental taxes are going to be augmented. So instead of maybe going to the city, a portion of the city taxes, or maybe all of the city taxes, will go to the TIF district, and maybe some other districts are going to participate. In some states, it's kind of across the board where 100% of the property taxes go into this TIF district, and then you're able to finance things from that funding and so forth. In Texas, it's a little bit more. A lot of times, it's maybe just the city and a county are going to participate, and maybe it's only 50% of the taxes. And so I'll just show you how we can implement that here. I'm going to click on our settings area again, and we have this tab for TIF district. And basically we check the box to say this project is located in a TIF district. We can, from this point, uh, if you've already set some things up as I have, we've got my TIF number 2, or maybe it's TERS number 2. We can call it whatever we want. We can specify how much of the incremental taxes and which ones will be contributed to the TIF district. And so in this case, we were kind of focusing on the building, but let's also do the land. So it's all of the real property improvements, all the real property increase will be the focus. So 40% from the city and 40% from the county are going to go to this TIF or TERS. Again, like I say, in a lot of states, it's 100% and it's for all of the districts. We have this flexibility here because again, in Texas for TERS is very often it might only be the city doing 100% or maybe the city doing 50 and the county doing some portion or something like that. But we've got this set up and now we can go back to our reports and we're going to be able to see the best place to see it here, I think, is the fiscal impact overview, where we had a city, county, school district, hospital, college, and now we've got this TIF number 2 listed. And so what's happened is the TIF is getting $1.1 million over the 10-year period in this case. And it's on the incremental real property taxes, and it's just on the share that the city and the county are giving up. So if we scroll down, we can see now the city is going to have a footnote for us that the real property taxes, it excludes the ones contributed to the TIF. So $819,000 are going to the TIF. If we keep scrolling down, we're going to see for the county that they're going to contribute to the TIF. Again, their 40% is equivalent to about $307,000. So then eventually we can scroll all the way down to the TIF district, and we're going to get a listing of all the revenues the TIF will receive. And that's that 1.1 million, with a big chunk coming from the city and some coming from the county as well. And so now we've got this TIF in here, or TERS. We could choose to offer an incentive from the TERS. So that TERS is receiving 1.1 million over 10 years. And if we wanted to do, maybe they're asking for $500,000 in improvements, we can plug that in and do that same type of, payback and rate of return analysis of $500,000 against the 1.1 million and get a payback period and rate of return. The other great thing, we have some, I don't know if I showed this in an earlier screen, but if we go to the community report, we can imagine that the city and the county are contributing to this TIF, and those funds go over here to the TIF. Now we can get a summary where we show, okay, the city's contributing the 819, the county's contributing 307. So that's that total amount of revenue that ends up in this column for the TIF. And we can see the different incentives that are being provided here. So that's kind of how a TIF is modeled here. It's really just with a couple clicks of a button. You can set up those profiles for the TIF districts and so forth. And so that's that. We have one other question here that I'm seeing. Looking for clarification. Once the data is set up initially by your company, would updates and changes be completed by the client? Does that have to be funneled through your company going forward? So the way that it works is we would set it up initially, and then on an annual basis, we would update that information. So when tax rates change, or typically it's usually sequenced when tax rates change, we'll also review all of the other parameters in there, things that might not change as noticeably, or some of the demographics and some of the commuting patterns and those types of elements that are built into your model will get updated on an annual basis. It can be a little bit of a collaborative thing where if you, would like us to make a specific change, or, you're asking, does the data have to be funneled through your company going forward? We can talk specifics, but in general, I think one of the values or part of the value that a lot of people find in our software is that they don't have to be the expert in the back end and change all of the things. If there are specific parameters that you want set to, be equal to certain values because, you've done some research and you need it to line up with some things, we can certainly set those things. But in a general sense, when you are looking at these inputs, so for example, we're looking at this property tax rate, if you wanted to modify that, you could edit these defaults. You could change this input, whatever. Let's say you wanted it to be 0.75. You can change it. You're changing it for this particular scenario only. So if there's a change that needs to be made for every project going forward, that would be one that you would send to us and we would update it. But it's not something that we expect you to update on an annual basis. It's part of what we're going to do so that you really only need to provide the project specific information. So the details about the jobs and the salaries and capital investment, and you won't need to be responsible for the back end. If there's more to that question, we can certainly chat if you want to reach out, and we can get into more details if there's something else you have in mind, for sure. But we're already up on an hour. We're probably losing people. But again, feel free to reach out to me. My name's Paul with Impact Data Source. You can just email me at paul@impactdatasource.com. My phone number is on the website. You can find me. We'll be sending an email with a link to the recording here. And then, yeah, look forward to hearing from folks, or if there's any other questions, look forward to chatting with you. Thanks so much.